helps, property friends, property strategists. I welcome you. Well, another dollar, another day, another month. Isn't time flying when you're having fun? The property friends musings for the month of April. Interesting situation. Really interesting situation. We have never seen the property markets in Australia to rise concurrently everywhere. It's unheard of. February 2021, the average capital gain was 2.1%. Every single capital city had an increase. Normally, it's a matter of one is a bit higher up, one is a bit slower. Every single capital city has risen. So I reckon there's great times ahead, really great times ahead. The markets are up everywhere. The rental vacancy factor is at rock bottom. There's great times to be investing. There is great times ahead for sure. And that really gets me to the importance of location. Location is everything, because as far as I'm concerned, it's a matter of not doing one property. Our strategy generally is a minimum of a 3 property strategy. Now, in order to do that, you need, on the one hand, the rental yield so that it doesn't eat you out of house and home. But on the other hand, the capital gains so that you can leapfrog from one and the other. Case in point, one of our investors finished a house in Tasmania, Midway Point, 18 months ago. An increase of $180,000 against the contract value that he's paid. Now, banks, who they are, they allow him to withdraw about 120, but that's enough to leapfrog into the next property. And that, as far as I'm concerned, is what it's all about. Once you've started the ball rolling, ideally, we create a snowball that rolls down the hill and gets bigger and bigger. And that's when I talk about the 3 phases in property investing. The first phase is the accumulation phase. That's where he or she who gets the most properties in the shortest amount of time wins. Then we get to the consolidation phase. And that is when the properties are just sitting there and are rising in value and are paying for themselves completely. That's the deal. That's the structure. That's the way to set up a portfolio for the long term so that you can keep going. Don't get stuck with a negative gear where you got to put in thousands of dollars yourself. So that is as much as I want to say to the strategy. Okay, we're looking at good times coming, that's for sure. Second subject, NDIS properties are going really, really well. The market has woken up to the fact that there is excellent returns to be had. Unfortunately, so have the marketeers. I am amazed, absolutely staggered, flabbergasted, and shocked, moreover shocked, about the misinformation and the holding back of information that is being done in the market. Guys, if you invest into NDS, please, please, please do your research properly. There are very few companies that will tell you the real cost. Yes, the returns are staggering, no question, but there is also additional cost. You need to pay for an SDA provider. You need to pay for the local real estate management. You need to, in my view, have a sinking fund. I haven't heard a single marketeer talking about putting money away for the changes that the tenant can request. People with disability have more power than your average tenant. And that makes sense. If Joe is in our house and Joe's, or Mary, whatever, if their health or their condition deteriorates, we as the SDA provider, we as the owner, need to put additional equipment in. Now, I don't want anybody to have to look at this lumpy cash flow and have to come up with money all of a sudden. So strong recommendation is to create a sinking fund. To that extent, on Thursday the 27th at 7 p.m., I'm doing a webinar specifically on NDIS and NDIS investment. And we're going to go through the big advantages, and there are great advantages. And we're going through the right way of doing NDIS properties so that they are sustainable, that they're long-term, because really you ought to set up that system for at least a 10-year rental. Now, not in one hit, don't do that. Go for 1, 2, 3 years and then renew. But the system ought to be set up for a 10-year investment time frame. And it will pay you handsomely if done the right way. Now, there is no point in trying to, what's the expression that I want to use? Throw the baby out with the bathwater and try to get the ultimate nth degree of return in the beginning. This is a long-term game. You want to make sure that you've got satisfied PWDs, person with disability, satisfied tenants in the old terms. And that means that they will stay in the property for the long term. You don't want to have tenant turnover. You want to have a secure tenancy. And this is what is one of the big advantages. If you set the houses up right, and that doesn't mean the bread and butter shoeboxes. Hear me. There is so much shenanigans going on in the market. It's crazy. You need to, in my view, sorry, I give it to you straight as always. You need to set it up so that it will fit and work for the people. So that's on Thursday the 27th. The information is on our website. You can click through from there. Sorry, apologies for that. Lastly, very quickly on the RBA, the RBA has decided not to change the interest rate. So we're sitting at the same 0.1%. In my view, I have private bets with people for a cup of coffee. That's the wager. I don't see the interest rate changing in the next 12 months. So let's see what happens. There's good times ahead. You got to be in it to win it. Check out our webinar on the 27th. The information is on our website, propertyfriends.com.au. Take care, have fun, and enjoy the